Be rewarded when you're active. In fact, you could save over £730 every year in discounts and rewards from our partners. Join over 1 million customers. Just search Vitality Life. Vitality. Positively different. Annual savings available with certain plans and are dependent on members' usage of rewards available. Terms and conditions apply.
It's Liz Hernandez with your TuneIn Music News Update. Tragic news for Kane Brown's musical family. His drummer, Kenny Dixon, died in a car accident on Saturday. Kane posted a heartfelt tribute on Instagram saying, "Love you so much, dude, and you'll never be replaced. I promise you that." Meanwhile, Zac Brown is suing Ryan Tedder over a song they worked on together. It's called Nowhere Left to Go. He gave the beat to Diplo to use on a different song. To hear more music from Zac Brown and Kane Brown, search Country Roads on TuneIn.
NFL fans, hear every live game on TuneIn Premium.
Down the left sideline, that one's intercepted. Down the sideline to the 20, at the 15, inside the 10, and down at the 8.
This Thursday, hear the home and away call as the Kansas City Chiefs visit the Denver Broncos at 8:20 p.m. Eastern.
Makes a man miss, and it's at the 20. Connor down the sideline to the 10, and he's going to walk it in for the touchdown.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
What if you could keep up with cable news even when you're on the go? With TuneIn Premium, you can listen to MSNBC live without any commercial interruptions. All of the news, none of the ads. Listen live on TuneIn Premium today.
From the TuneIn Studios, I'm Fonseca with your daily sports update. Don't forget, NFL lives right here on TuneIn. Tomorrow, we've got Thursday night football. Chiefs, Broncos. And kickoff, 8:20 p.m. Eastern.
It's about developing, and it's not all the time that you just come in here and have a bunch of, we're young and we're building back up, and there's going to be some Hall of Famers on our team later on.
Teams are getting ready, and if you want to catch it, make sure to follow your favorite team. Either favorite Chiefs or Broncos, or look for NFL at your TuneIn Sports Update.
Good morning. It's 11 a.m. at Under Armour headquarters in Baltimore, Maryland. 11 a.m. on Wall Street, and Squawk Alley is live. Wednesday morning. Welcome to Squawk Alley. I'm Carl Quintanilla with John Ford at Post 9 of the New York Stock Exchange. Morgan has the morning off. Interesting market day setting up. Despite all the volatility, tech remains the market leader this year. The XLK handily outpacing the S&P. Semis up more than 40% for the year, almost doubling the gains of the NASDAQ. And then you've got the earnings spotlight, of course, tonight, Netflix after the bell. Joining us this morning, Joel Kalina, Wedbush Securities head of TMT, and Kenny Polcari, Sladestone Wealth senior market strategist and CNBC contributor. Morning, guys. Good to see you.
Morning.
So, semis, banks with a second good day, yields, VIX below 14. Is the rotation happening?
I think the rotation is happening, and I also think the earnings season is not nearly going to be as disastrous, I think, as the street and some analysts have made a lot of people expect. Look, it's already started. The bank numbers yesterday and again today perform much better than expected. Nobody's talking about disaster. In fact, some of them are even giving much more positive guidance. Johnson & Johnson, UNH, along with some of the banks. And so therefore, I actually feel good about it, but I think there is a rotation, which is normal based on everything else that's going along, Democratic debates and who's attacking healthcare and who's attacking technology and all that stuff. So there'll be rotation, but it's all part of the process.
You still think we're range bound though here?
I think we're range bound. I think on the lower end, we're going to test the lows earlier. I don't know, was it last month? It was 27.58 earlier this month. 27.58 is also the 200-day moving average. We came, not 27, excuse me, 28.50. 28.58
sure, yeah.
Was the 200-day moving average. I wouldn't be surprised if over the course of the earnings cycle that we see the market kind of test lower there, not break it, but just test lower. And I think as we move into the end of the year, then the market rallies back to the highs just around 3,000 is where I think we're going to end up being.
S&P just went positive a few minutes ago. We'll see where it goes from there. But Joel, a lot of turbulence in tech, particularly software. And last week or so, there was a call from Morgan Stanley about IT spending that got some people concerned. Then Goldman Sachs on hardware. And now we got Workday, which is software, which is cloud. I thought that was supposed to be safe. What's going on?
Yeah, I mean, Carl mentioned, right, XLK highs of the year leading the market, but there's a lot of moving parts under the hood. And tech, it's been a rough year for many, to say the least. Guys have seen performance erode really since August kind of came around. And you can say death by prospectus. Really, when that WeWork S1 was printed, anything with a lofty valuation and growth had just been carried out to the woodshed. Then they had Cisco issue that warning in mid-August, and then it's kind of been the cloud beats are getting smaller and smaller.
Adobe downgrade today.
Adobe, Citigroup came out with them, the Morgan Stanley CIO survey call, and clearly, whether it's, valuations being compressed in the private side, poor IPO performance, just negative macro impact, hence the semis continue to benefit from the cyclical rotation. And, they're maybe not that well owned by the hedge fund community. Guys may be scarce to chase them. Hence, it feels like it's going to be a death grind higher in the chips, and no one wants to touch these software names.
Despite inventories, all-time highs, pretty much.
Exactly. Yeah. But things with the semis, at least you have the semi equipments. They're benefiting from China becoming more silicon independent. EUV, 5G acceleration. So there's some good stories. But again, there's a lot of debates and moving parts under the hood.
So, Kenny, you talk about earnings not being as bad as feared. I worry about guidance, and some of the guidance has been good, but tech guidance in particular, when we're getting these projections out into 2020 being in the first half, not so great for semis, IT spending looking to slow down. What do you expect to hear on that, and how's that going to affect the market?
Listen, that's a sector of the broader market, right? The broader S&P.
Arguably, it brought us here, though.
It did bring us here, and what I said, I think there's this rotation going on, and so if you start to see, as we're starting to see, some maybe pullback or modification of the earnings, I'm not going to be really surprised. I still think tech has got a place in the portfolio, but look, if tech starts to come under a little bit of pressure, is it going to really affect that industry? It'll affect the NASDAQ, but I think the broader market feels really good to me.
Do you think Netflix tonight is a canary for anything, or is it so specific that even if they miss guidance?
Yeah, I mean, it is very specific. I mean, so when they missed Q2 that badly 3 months ago, stock was essentially dead money. You could have shorted stock at 3.25, and it's been one heck of a trade since then. Now, my problem with Netflix, a lot of the bulls are kind of hopeful positioning is the most favorable it's been in quite some time. Longs have been trimming, shorts kind of is near a 12-month high. I think a $6 billion notional value from the short base. Again, if we see a squeeze, I'd still see the multiple cap to the upside in Netflix, simply because there's no pricing power left in the model, and you have real competition coming. So I think investors, especially in the tech community, they want to see Disney Plus numbers for a couple quarters to get a sense of where Netflix stands. It's not going away. I just think the growth's going to moderate. But again,
churn.
Exactly.
But if they miss, then people will use as an opportunity. Once again, they'll jump in. They're overpriced. They'll sell them off. They'll do all that stuff, and then they'll stop and scratch their head and say, "What are we doing?" Right? It's a miss in Netflix.
Right. Yeah. So, Kenny, if the heat comes off Adobe and Workday and the likes of those, even Netflix, can we count on the Disneys and Walmarts to really power us higher? Because that's not what you would have thought a couple years ago.
No, it's not. But, listen, I tend to be a more conservative player. And so if you're somebody who's worried going into 2020 and the election cycle, and you're kind of worried about, this big bad boogeyman of a recession that's going to come at some point, and you're somebody that still wants to have stock exposure, then I would imagine you would flock into value names. Whether or not you say Disney's a value stock, it is a big Americana company. It's got a nice dividend. It's a healthy name. It's a name that everybody knows. It's a name that provides some stability and security. And so I wouldn't be surprised to see kind of that rotation into those big Americana names as you move into a period where you might be a little bit anxious, cautious.
Yeah, well, we'll see. Even Iger's talked about the integration issues they're going to have with the Fox assets and so forth. Not to mention, as you said, they want to see some proof of performance on Disney Plus. Maybe the bigger story tonight, who knows, could be CSX, right? We already know what rail traffic's been like. Cass Freight says GDP's going negative by the end of the year.
Right.
If they say something marginally negative, people will put some investment in that.
Well, they will put some investment in that. And if we really think GDP is going to go marginally negative, then that speaks very specific, right? I'm not necessarily sure I could see the slowdown. We've been talking about that. It's certainly coming. No one should be surprised, but I'm not necessarily sure that one report in CSX. Now, if they all start with the same story and they all start missing and lowering guidance and talking negative, that'll be a different story. But, the jury's still out.
Yeah, banks have not done that. That's for sure, right?
Banks have absolutely not done that.
Guys, the information continues to flow in. We'll see what happens tonight.
Yeah. Thanks.
Good to see you.
And you.
When we return, disrupting the cloud and cutting Amazon down to size, John Chambers joins us right here next with the venture he says will do it. Don't go anywhere. We're back in a moment.
Johnson & Johnson is a baby company.
Why is Lizzie going rental for Fizzy Haze? Is it because her flat is so beautiful and spacious? Snazzy! Or has roof terrace, garden and party room? Surprising! Or because it's 18 minutes to Paddington? Easy! With friendly staff on hand to take any deliveries? Amazing! Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living, reinventing renting.
With school runs costing as little as 2p per mile, the electric car is now the car. Search Go Ultra Low to find out more. Cost based on Economy 7 and may vary.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Psst, parents, it's up to half price on all toys at Sainsbury's right now, so you can keep us occupied this half term and even stock up for Christmas. The Sainsbury's up to half price toy sale ends 22nd of October.
Subject to availability at selected Sainsbury's stores, excluding Centrals and Locals, not available online. Valid 16th to 22nd of October.
Breathe in and out. Every day, you take 20,000 breaths, potentially exposing yourself to harmful particles of pollution. According to the Royal College of Physicians, air pollution contributes to around 1 in 20 deaths in the UK. But at E.ON, we believe it's time to do something about it. We've committed to installing ultra-fast electric vehicle charge points. We offer solar panels and batteries that collect and store energy. And we've helped a citywide transport operator introduce a large fleet of emission-free electric buses. It's time to clear the air. Search E.ON Clean Air.
Amazon's cloud dominance is coming to a close. That, according to tech legend John Chambers, who says his next venture is set to disrupt the entire space. Joining us now here at Post 9, the CNBC exclusive, Cisco Chairman Emeritus John Chambers and Pensando Systems co-founder Sony Giandani. Guys, welcome.
John, it's a pleasure to be with you again. Carl, good to see you.
Bold claims, but I would expect no less from you. I take it you've caught another market transition, but tell us exactly what Pensando does, because this group, Sony included, working on this, legendary in IT, doing innovative things within Cisco, left Cisco a few years back under some controversial circumstances. Is this a chip? Is this software? Who's the customer?
All right. So taking in the sequence that you talked about, the market transition is the cloud. What Pensando does in its ecosystem, very simply, is they're pushing compute, storage, networking, security, the apps, big data, driving off a lot of the major tech trends, 5G, etc., into the cloud. As that occurs, it gives the opportunity, what Pensando does, to create for each company their own customized version of the cloud systems. In other words, really to make it work very uniquely. We have yet to miss with any enterprise service provider, cloud player in the world when we sit down and say what we do. Now, for your listeners, Sony, we talked about the iOS from Apple and the Android being a good example of exactly what we're doing. Put it in those type of terms, if you would.
Very simply put, if you look at the trends that Apple has been pursuing with the iPhone and all the iOS software, starting all the way from the chip all the way to the software and the device is something that only Apple and Apple's customers get to consume. We are the equivalent of the Android platform, which is open, which allows the whole ecosystem to play, and the chip and the software would run on standard off-the-shelf compute infrastructure, whether it's built by cloud customers or whether it's taken by enterprise customers.
So who are you taking share from? Whose wallet is the money going to come out of? Are you trying to get cloud providers like Microsoft to build this into Azure infrastructure, and that's how you're making money? You're trying to get HP to build this into service? Is that how you're making money? Where's the money come from?
It's a combination of the two. today's announcement really is about having customers like Hewlett-Packard, which will be a strategic investor and a go-to-market partner for their enterprise customers. So those customers would be able to acquire this technology in HPE infrastructure and enable them to go build that cloud architecture. At the same time, cloud customers have also validated this architecture, as a result of which you will see announcements that are part of our overall customers that we have added, including Oracle Cloud and Equinix, that also want to have the ability to take this into their cloud environments.
I think what you're looking at is a whole new category of opportunities here. Our addressable market today is about $40 billion a year. The ones who get hit first are the appliance players, the silo players, the firewalls, the VPNs, the load balancers, because we'll consolidate that. It's a software play on top of silicon. Where it goes is it gives these companies a chance to innovate. The products we've built are 5 to 10 times the performance of Amazon, not 50 or 100%, 500% to 1,000. Then you suddenly give control so these companies can innovate much faster, use their technology to combine it with business models as everything moves into the cloud. So it is that Android example. Think of us as the platform that powers choice, and a very well-run, extremely dominant company in Amazon that we're kind of challenged a little bit to give everybody choice and selection on where they go, and innovation.
John, broadly,
yes.
We've seen some survey work on IT budget growth spending,
yes.
Expectations sliding 4 straight quarters. We know what Cisco's guidance was like, kind of downgrade of Adobe today. Are CIOs going to want to spend more or less over the next few years?
Well, 2 separate questions, if I may. If you're looking to the CIOs, the budgets are going to be tight to down. So if you're purely selling into the IT department, it's going to be a tough realm. If you're because budgets are going to get squeezed as people get concerned about a recession,
is that what it is?
Et cetera. And secondly, they're getting good productivity out of IT, so they're leveraging that. The key issue, and most of the startups I'm involved with, especially with Pensano, they sell to the technical lead, but they sell to the business lead, and they sell at the CEO level. So if you're in topics like security, my average security startup that I'm doing is growing 200% a year on fair, whether it's D-drone and protecting what could have been prevented in Saudi Arabia, or a Provoro, which is a smartphone I showed you guys. It won sole source at DISA, the Air Force, etc. But you go back to really where the budget is. It's where the CEO and the business units want to lead. So if you're only selling to IT, that's going to be just okay over the next year or two with people concerned. If you're selling business outcomes, then can things get very good. We're looking at probably growth per year of 80% in headcount last year, 70% this next year. We're looking, John, at how we create not 10,000 millionaires like we did at Cisco, but we've already know exactly what the stock has to do to create a millionaire for every one of our employees.
Sony, IPO, how soon?
The goal is to get there in 4 years.
And the fun part is, different than the other startups you're seeing, we will do it already making money. The 4th year, we should generate $100 million in profits and $100 million in cash. So from the very beginning, we designed this to be profitable, and we are not going to let some of the mistakes I think some peers have made in terms of breaking culture or not having a plan for profitability and free cash flow. We think it's back to the future in that way, all about profits, cash flow, and culture.
You mentioned startups. Are either of you discouraged about what you heard out of the debates, or is this simply primary silly season policy-wise?
I'm going to protect you on this one.
I'll run interference.
Yeah, I was very disappointed. When I talked to Macron in France just 2 weeks ago, he outlined the 40 venture capitalists I took over there, a vision for his country where startups play, how you're going to do job creation, how you're going to create average household income. With Modi in New York 2 weeks ago, with all the top CEOs of America, honored to be his ambassador, as he calls me globally, and I'll be seeing him this next week in India. He talks about GDP growth of 6, 7, 8%. He outlines hope and a vision. He says how they're going to generate 1.2 million jobs per month. Nobody told me last night in that debate how they're going to generate 25 million jobs in the next decade, and how they're going to replace 10 million jobs that are going to disappear due to automation.
And even if we did that,
yes,
do we have the people to do those jobs? I didn't hear a lot of talk about education, about preparing the workforce of the future, some on apprenticeships, but giving away $1,000, raising the minimum wage isn't necessarily going to get you the people who can build and work for the next Pensando, is it?
Completely agree. So this is where I think Biden was the calmest of the group on it overall, was focused on what needs to be done. But I was at West Virginia University, and this is an example not for a university, but for the whole nation. We met there with the president of the university, with the governor's office, with the Speaker of the House, the the president of the Senate, both U.S. senators, Democrat and Republican, we said, we're going to make this state a startup state. We're putting in the university, changing the curriculum. Everybody will be required over time to take entrepreneur courses. You break down the silos between engineering and business and med school. You bring in venture capital. You do it for West Virginia. You cookie crowd it across the central part of the nation and the southeast. So you have to have people that are able to envision the future and say, how do you do job creation? That will dream to say how we make our kids millionaires rather than say, how do we take money out of one pocket and give it to another pocket? That will dream about our future, large companies not adding jobs, but the small companies being really the future together.
Even smaller ball, we got to get more of our kids proficient at math in elementary school.
And I would teach them entrepreneurship.
Entrepreneurship too.
Yeah.
Sonia Giandani, John Chambers, great to have you.
Thank you. Thanks for our enthusiasm. We look coming back. Follow this company. They'll make a great IPO.
I'll keep an eye out.
All right, guys. Thank you as always, Carl. John.
As we said a bit earlier, Netflix does post tonight after the bell. We're going to talk about what to expect after a break with the Dow just moderately down 16. Don't go away.
There's golf.
Psst, parents, it's up to half price on all toys at Sainsbury's right now, so you can keep us occupied this half term and even stock up for Christmas. The Sainsbury's up to half price toy sale ends 22nd of October.
Subject to availability at selected Sainsbury's stores, excluding Centrals and Locals, not available online. Valid 16th to 22nd of October.
Fly with Cathay Pacific to over 70 destinations across Asia and Australia and move beyond the familiar. State-of-the-art cabins, world-class entertainment, and award-winning service, making sure you arrive ready to make the most of whatever lies ahead. Whether it's the stunning coastlines of Sydney, the secluded waterfalls of Bali, or the baroque splendor of Manila, book now at cathaypacific.com. Cathay Pacific. Move beyond.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
To advertise the McCafe range from McDonald's, we could use the silkiest, smoothest, sensualist voice to deliver a silky, sensual voiceover about the smoothness of the Arabica beans in our coffee, drawing comparisons between the voiceover and the smooth, sensual silkiness of said beans. We could do all that.
But we don't. What we do is use freshly ground Arabica beans and organic milk. McCafe. Great tasting coffee. Simple.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want crime dramas, I've got loads, and they're never going to guess who did it. Dramas, I've got Emmy-winning shows. Ooh, I know, so fancy. Or how about thrillers? They're going to be on the edge of their seats with these. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want thrillers, they're going to be on the edge of their seats with these. Sports, these games are unmissable. Get in. Or how about crime dramas? I've got loads, and they're never going to guess who did it. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
Do you remember picking out your engagement ring in the jeweller's window? Or choosing your first home? Or deciding the names of your children? When it comes to the important choices in life, you've always taken the greatest care. So shouldn't the same go for which firm of funeral directors you use? After all, that's an important choice too. At Dignity Funeral Directors, we're like you. We also take the greatest care. Our name is your assurance we'll be there by your side every step of the way. Just look for the sign that says Dignity. It's on all our branches and on the Dignity website. Dignity Funeral Directors, taking the greatest care.
Rival streamers and a risk of subscription overload are in focus as Netflix prepares to report after the bell tonight. Julia Borston is in LA with a look at what to expect. This is going to be a big quarter, Julia.
It will indeed, Carl. And with Netflix shares down about 22% over the last 3 months,
The streaming giant's subscriber numbers will once again be in focus, especially after last quarter. Netflix's U.S. subscriber numbers dipped for the first time in years, and its international growth fell far short of analyst expectations. Now, the two numbers to watch when the numbers come out this afternoon are 7 million. That's how many subscribers the company forecast it would add in the third quarter, and 9.5 million. That's the number of subscribers analysts forecast the company will guide to in the fourth quarter. Now, that guidance is more important for the fourth quarter than ever because Disney Plus and Apple TV Plus are both launching about a month into the quarter, joining an already crowded streaming space. Now, even before these new services launch, a new survey out just yesterday reveals that consumers are already feeling subscription overload. 27% of consumers polled by Amdocs Media say they spend more than $100 a month on entertainment subscription services, while 59% say they're happy with their current subscriptions. A fifth of consumers say they'd consider adding a new service, another one, if something new came to market. But the more subscriptions, the bigger the hassle. A third of respondents say remembering account passwords is their biggest pain point, and 39% say having all of their services bundled into one platform would make it easier. So we'll have to see how many subscriptions people are indeed willing to pay for once some of these new entrants hit, and we'll have to see if Netflix hangs on to that first mover advantage. Carl, back over to you.
All right, Julia, thanks. I'll take it. And European markets set to close in just a few minutes. Seema Modi has the breakdown as Brexit once again has things up in the air. Seema?
Yeah, just when we thought we would get a deal. Right now, European stocks are mixed or to the upside here with the German DAX up about 0.5%. What is in focus are these new comments from EU's Donald Tusk this morning, telling reporters that the basic foundations of the agreement are ready and could be accepted tomorrow, but noted that there seem to be some doubts on the British side. Tusk saying the picture should be clearer in 7 to 8 hours. Now, as we await that summit in Brussels to kick off, watch the FTSE 250. This is a basket of domestic stocks in the UK that should benefit from a stronger pound. The index has outperformed in the past 1 week, up about 5 to 6% versus the FTSE 100, which is a bit more diversified. You can see it's up only fractionally over the past 1 week. Separately, the big story is yields across Europe have come off their July lows. The German Bund yielding negative 0.3%. There is some talk among economists in Europe that there's only so much room left for the European Central Bank to cut further. The next policy meeting, by the way, on the 24th of October, which is next Thursday. Now, meantime, higher yields helping European banks this morning. We have Commerzbank, Deutsche Bank, all up about 1 to 2%. Lastly, online retail. ASOS, a big mover today, beating earnings estimates, avoiding yet another profit warning, and that's helping shares outperform up nearly 30%. Carl, sending it back to you.
All right, Seema, thank you very much. Seema Modi. Let's get a news update as well this morning. Sue Herrera is back at HQ with that. Hi, Sue.
Good morning, Carl. Good morning, everyone. Here's what's happening at this hour. Turkish President Erdogan telling parliament that Syrian Kurdish fighters must leave an area in northeast Syria as of tonight. That's a condition for Turkey to stop its military offensive. He rejected U.S. calls for an immediate ceasefire. Prosecutors rejecting a proposed plea deal for the man charged with killing 11 worshipers inside a Pittsburgh synagogue. Robert Bowers offering to plead guilty in exchange for life in prison, but prosecutors are seeking the death penalty. A jury in Wisconsin has awarded $450,000 to the father of a boy killed in the 2012 Sandy Hook school shooting after he filed a defamation lawsuit against a conspiracy theorist who falsely claimed that the massacre never happened. James Fetzer, a retired professor who co-wrote the book titled Nobody Died at Sandy Hook, called the amount absurd and said he would appeal. And Chicago public schools will be closed tomorrow. Mayor Lori Lightfoot said that she cannot accept a teachers' union demand that she said would cost the city $2.5 billion that it can't afford. The union is expected to vote later today for a strike. You are up to date. That's the news update this hour. Back downtown to Squawk Alley. John, back to you.
All right, thanks, Sue. In just a few minutes, Sir Richard Branson and Under Armour CEO Kevin Plank are going to join us. Well, why are they together? We're going to tell you after the break.
About the tremors.
1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple.
And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
Why is Lizzie going rental for Fizzy Haze? Is it because her flat is so beautiful and spacious? Snazzy! Or has roof terrace, garden and party room? Surprising! Or because it's 18 minutes to Paddington? Easy! With friendly staff on hand to take any deliveries? Amazing! Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living, reinventing renting.
Isn't it funny how you're noticing them more and more? Parked at the school gates, waiting at a red light, or charging on the side of a street. The electric car. With over 4,000 new drivers on the road each month and over 40 models available, the electric car is now the car. Search Go Ultra Low to find out more.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Today, your information is more exposed than ever. When you shop, sign in, or browse, you could be vulnerable to cybercriminals. More online threats demand more protection. That's why new Norton 360 provides multiple layers of protection, combining device security, secure VPN, password manager, and cloud backup all in one solution. Get new Norton 360, starting at $24.99 for the first year.
President made some comments about China a few moments ago. For all of that, we'll get to Eamon Javers at the White House. Good morning, Eamon.
Yeah, good morning, Carl. We've been watching the president here. He's been sitting alongside the president of Italy in the Oval Office, taking some questions on China. The president said he would likely not sign a trade deal with the Chinese until he meets with Xi Jinping at the APEC summit. That's in the middle of November, so giving us more clarity on the time frame there. He also said that the trade deal announced last week is in the process of being formalized on paper. He called it papering the deal. There are questions now today about potential inconsistencies between what the president said about the Chinese commitment to $50 billion worth of agricultural purchases on Friday and doing that in a 2-year time frame, and then what the Chinese have said since Friday, in which they haven't confirmed that number in terms of a dollar figure or the timeline. So the president's going in now to a news conference at noon East Coast time with the Italian president, and we'll see if we can get a question to him on exactly what the Chinese committed to and whether he's prepared to deliver that deal before that December increase in tariffs that he's put out there on the horizon, or whether or not it will have to wait until after that time frame, Carl.
Certainly his comments did help push the market slightly into the green this morning, Eamon. Thanks, our Eamon Javers. Speaking of all of this, don't miss Larry Kudlow on Squawk tomorrow, 8:30 a.m. Eastern Time. That's an important interview given all the information we learned last week and all that we still don't know.
Absolutely. And meantime, breaking up big tech and how it should be done. It's a big theme of last night's Democratic debate in Westerville, Ohio. Kayla Tausche and John Harwood join us now from there. Break it all down. Hey guys. Kayla, morning. I'll start just by asking, it didn't seem like everybody was on the same page, particularly when it came to Elizabeth Warren and big tech breakup. Where did you see it sort of breaking down among the candidates?
Well, this is one of the first times, John, that we've even seen those battle lines being drawn where there was a substantive enough debate on this topic where you could really see where a lot of these candidates stood. Most of them are in favor of more regulation, closer oversight of these big companies. You heard Senator Booker and Senator Harris talk about that. Senator Klobuchar also supported more competition. But you did have a pretty decisive moment when former Congressman Beto O'Rourke said that these companies should be monitored, but they should not be broken up. And he specifically cited a company like AT&T Time Warner. And he said that breaking up a company like a big media company would essentially threaten the power of the media or an independent press. And he suggested that doing something like that would actually have the opposite effect that some of those candidates are going for. Andrew Yang also said that simply that wouldn't work, that no one really wants to use the fourth tier product, and that sometimes competition is false competition and consumers don't actually want those products.
I got to say, John, listening to some of the debate, it seems like tech and maybe billionaires broadly are the new banks. Just there was nothing positive to say of substance about them, about opportunity. Might they be overshooting what the base is really looking for here? I didn't hear a lot of optimism.
Well, I do think that big is a target for Democrats, and to the extent tech gets associated with big, that's something they're going to go after. But I do think, as Kayla indicated, it's sort of significant that you had Beto O'Rourke, Andrew Yang, Cory Booker, all saying that breaking up big tech was not necessarily the answer. They agree on antitrust enforcement, but they're not saying that that is the solution to economic problems. And more broadly, what Elizabeth Warren found last night was, having set the pace on policy ideas for months now and seeing other candidates chase her, now that she's gotten to the front of the pack, they're challenging her on whether her ideas